So good evening, everyone. Welcome to our July Investment Club meeting. I'm greeting everyone specially. I can't call everyone in, but trust me, guys, I'm greeting you especially, and I hope everyone is doing okay. My name is Victor Ovies, so I work as the assistant community manager here at Risevest. I'm sure most people in the community are already familiar with me, and I'm your host for today. I would like to thank everyone for taking the time to join us today. Really appreciate. And I hope we're all doing great, especially, and we're using this weekend to rest. I'm very sure nobody is more excited than salary earners right now because we are towards the end of the month and end of the month of July, and this is mainly the time we start getting that notification of the salary, of how well we've worked hard, and then salary comes in. So ladies and gentlemen, if you have any 9 to 5, this is the perfect time to start billing them. Start billing the 9 to 5. Start billing them, guys, because we're towards the end of the month. But in case it's your first time joining us, we normally organize this webinar every last Saturday of the month, and mainly the aim of this space is to share actionable insights on how you can manage, invest, and grow your finances better. Which brings us to today's topic: understanding how political shifts impact your investment. And with me here today, I have two esteemed guests, David and Damilare. And I'll be giving them the mic shortly to introduce themselves. But for people that might be joining us newly and are not familiar with how we do this, so this webinar this afternoon is brought to you by Risevest. And if you are new here and you're wondering what the brand Risevest is, briefly, Rise is a digital wealth manager that connects Nigeria to foreign investment opportunities by offering fixed income securities, US real estate, and US stocks. So, there are several investment options that exist in the Nigerian markets, but they only offer you stock options. But with Rise, we do two things differently. First, we act as a fund manager. So this means we don't let you figure out which stocks to buy. Instead, we invest on your behalf. And so we start this space early. If you're just joining us, we have a community on Telegram where we all share strategies on how we can do better at our finances. We also discuss market news and insights, and I'll be dropping the link to that shortly. Before we go to today's topic, I would like to quote a Warren Buffett interview. I think I've dropped it sometime on the community. So an interviewer was asking him what's the biggest investment that he can ever have. So the interviewer was asking Warren Buffett, Warren Buffett is arguably the biggest investor of our time, was asking him what's the biggest investment you can ever have. And he replied to the interviewer that the biggest investment you can ever have is yourself. So he went further to explain that you can have everything taken away from you, whether it be your assets, your stocks, your crypto, whatever assets you have, you can have it taken away from you, maybe from bad investment decision, maybe you're even too careful and just fraud activities, or maybe the market just doing its marketing. You can have any of these things taken away from you. But the only thing you can never have taken away from you is your knowledge. So what does this mean? It means you have to keep on investing in yourself. You have to keep on educating yourself. And how do you do this? By learning new skill, by staying updated. And this is where our Telegram community comes in. And thank you very much for joining in early. So let's move on to the topic of the day: understanding how political shifts impact your investment. We've seen how political shifts impact investment. I'm sure everyone is monitoring the US election, how there's an upcoming election in the United States by, I think, from sometime in November, and investors are monitoring these activities. There's political crisis in Kenya. Investors are also monitoring these activities. That's why this webinar is a really, really insightful one, because you're about to learn We're about to learn how you can better in your investments. What are the likely moves you can make? What are the likely decisions you can make? This is where it all comes in. And we have two professionals in our midst this evening. We have David Olujinmi, who is a financial analyst from Nairametrics, and we have Damilare, who is a finance and investment analyst at Risevest. So I think I'll be leaving the floor for David to introduce himself to our community this evening before we move on. So basically, just tell us your name and what you do. David.
Hi, good evening, everybody. My name is David Olujinmi. I work as a financial markets analyst with Nairametrics. Okay, basically that's all. That's according to his instruction. That's all. Thank you.
Thank you very much, David. So nice to have you here, and thank you for joining us this evening. So Damilare, over to you. So just basically introduce yourself to our community and tell us what you do.
Thank you, Victor. So good evening, everyone. My name is Damilare Akinlotan. I'm one of Rice's finance and investment analysts.
All right, Dami. Are you done? Sorry.
Yeah.
Okay. Thank you, Dami. Thank you, David, for joining in with us today. David and Dami are specialists in this field, most especially finance and investment, and they're going to be taking us through the topic we have outlined today. So basically, this webinar is meant to be for an hour, so we're just going to use like 40 minutes to discuss this very insightful topic, and then we open the line for the next few minutes before to take questions and conversation you might have. So in case anything comes up to your head or anything comes up to your mind, you can jot them down so you don't forget them. And then by the end of the discussion or conversation, we open the line for questions and answers, or like for contributions you might have. So David, I'll start with you. So the first question I have for you is, can you explain how political changes such as new policies and regulations generally, like how do they impact investments generally? So there are always changes in policies, like we all know, there are always new policies, there are always new regulations, but generally, how does this impact my investment? Over to you, David.
So the thing basically is, this question is likened to a case of asking how does the soil affect the growth of a plant, because the political landscape in any country is like the is like the number one determining factor of how businesses operate. Is the when you get your politics wrong, you get your economy wrong, you get your policies wrong. Eventually you get investments wrong, basically. So it has very huge impacts. Like I don't know if this is the question. I don't know if this is the part where I start to talk about some of the impacts, but there's a huge impact. And I'll just give a very basic example in answering the question. I'll give an example with the windfall tax, the announced windfall tax, the one which was announced on July 17th. I think that was last week, Wednesday. So, since the announcement of the windfall tax, Nigerian banking stocks have taken a hit. They've lost about 400 billion in equity value since then. That is one of the ways in which that's one of the ways in which politics affects the investment landscape. So, I don't know if Damilare has anything to say or say to that question. I want my answers to be short and succinct. Thank you.
Thank you, David, for that. I think that quite explains what was asked. How does politics impact your investment? But Dami, if you would like to buttress on that very quickly, you can.
Yeah, sure. So like a couple of other ways. David has done excellently well in describe that. I think you even give me a scenario. So like a couple of things that I could actually outline and just beyond Nigeria. I mean, I'd give an example in Nigeria, but like other things maybe outside of Nigeria, you could look at the likes of tax reforms. So like there are some policies that they actually shape how the investment landscape is. Examples are tax reform. So typically in economies that have lower tax rates, they are usually attractive for investments because businesses want to pay lower taxes on their investment on their businesses rather than so it allows them to actually earn more profit. Also, you have there are like a number of things to it. But like you have the fiscal policies, you have the monetary policies that could actually like shift the investment scheme. The fiscal policies actually like they deal with the government itself. And then in a way, when when a new administration comes into a particular country like Nigeria now, we have APC as a ruling party. They tend to point their own monetary guys into the positions like the likes of the CBN. So in a way, you can link the federal government and CBN as one entity. So they tend to determine how the economy goes. And as David had said, if it gets your politics strong, it gets your economy goes. The likes of monetary policies, fiscal policies, interest rates, tax, government spending. So everything comes together to actually like shaping how the investment landscape. We also have the likes of subsidies. You can see when the came in, the first thing was he said was like, I'm going to scrap for a subsidy. Like I said, I has done that since this administration has begun. So like things like that actually tend to shape how the economy and then the investment landscape. By far and large, we think Nigeria's economy is a bit unattractive, by the likes of inflation, high interest rates. It's not looking really good. Our currency has been devalued. So I mean I could go on and on and on now on how the politics or the political shift affects the investment landscape in the economy. So yeah, just that.
Thank you very much, Damilare. That was quite extensive. You explained it quite well and in detail. So basically, new policies, regulations can impact your investment. There are like fiscal policies, monetary policies, and there are other regulations that might like impact inflation that might indirectly impact your investment. So you have to always be on the lookout for things like this. So I think this brings us to our next question. Over to you, Damilare. So are there like specific sectors or industries that are more sensitive to political shifts than others? So if I'm trying to invest, or like if I'm an investor, like, and I'm like researching on some sectors or industries that are most, is there like anyone that's more sensitive to political shifts than the other?
Yes, they are actually. And then yes, it depends on the kind of economy or say country you're investing in. So say for the likes of Nigeria, like there's some sectors that are actually like the backbones of the economy. We have the likes of the oil and gas, the financing industry, we have some of the agriculture and the manufacturing industry. So it's like key economies, this is like key sectors.
So Dami,
Yeah.
can you hear me?
Yeah, I can.
So you're quite inaudible. I don't know if it's only me, but you're kind of muffling a bit.
Okay, fine. So is it clearer now?
Could you say something again? Sorry.
Yes, is it clearer now?
A little bit.
Oh, wow. How is not my network? But like, I'll just continue
no,
speaking.
I think you were far from the mic before.
Okay.
Or something
Is it better
like
now?
that.
Yeah.
Yeah. But maybe it's audible now.
Okay. Yeah, so I was saying like it depends on the kind of economy or say country you're investing in. Say, I'll use Nigeria as an example. We have key sectors of industry that are like the backbones of the economy, such that the government really needs to always regulate and then always bring up policies to, determine how things go in those sectors. We have the likes of oil and gas, we have the finance industry, we have agriculture, and then I think we have manufacturing. So you will tend to see government that they always come in with new policies or regulations just to determine how these industries play out or how they fare. So say for the oil and gas, I know you at some point in time, there was a deregulation in the oil and gas industry, which gave some companies the ability to do what they want. And as David had actually said from the beginning, also the windfall policy that was announced a couple of weeks ago, which has affected how the banking sector. So like there are specific sectors in each economy that governments tend to bring new policies, and then no matter the policy they bring, it tends to hit these sectors more specific. So in the US, you can see the likes of, say, the telcos, you can see the likes of healthcare, because the healthcare is, I wouldn't say highly regulated, but like the government tends to implement policies just to protect the consumers ahead of. So in the likes of the US, the government can come up with a new policy today that favors the consumers more than these companies, and then it tends to hit their finances of how they generate sales. So yeah, if you want me to give you specific sectors, say in Nigeria, as I said, the finance sectors are highly regulated, and then the body tends to have more policies, the oil and gas as well, say in the US, the healthcare, the telcos, the ICT, semiconductor, as you can see, the US-China trade wars. So yeah, I don't know if I've answered the question specifically, but like those are the kind of sectors that tend to have more sensitivity to government policies.
Yeah, you quite answered it. It was an insightful one. I was going through the Q&A. Someone was saying Damilare is speaking too fast. So that's why it's good to be a financial analyst too. You're either on spot or not on spot. But thank you, Damilare, for that. Also, it might be network. So network is kind of lagging. So it might be the network lagging. That's why for that. But thank you, Dami. David, would you like to buttress on that point before we move on to the next? So the question basically was, are there specific sectors or industries that are more sensitive to political shifts than the other?
So one thing about this question, I'll be number one, manufacturing sector, number two, finance sector. Number three, I would say the telecommunication sector, ICT sector, basically. So number one, in the sense of every policy shift in Nigeria, every new policy shift in Nigeria has an effect on the manufacturing sector. When you start with the MPR, that's the benchmark interest rates. When you look at it from the start of from last year, not even from the start of this year, Nigeria has increased benchmark interest rate by about 4.5% in 2022. And look at what effect that's had on the manufacturing sector. First of all, manufacturers have had to battle with high cost of financing. So in that sector, we've seen that there's been like a very, very, very slow growth. In some cases, in some quarters, we've had decline. So last year, the sector grew less than 1%. This year is going in the same direction to the manufacturing sector. I see manufacturers shut down. So when you as an investor say, okay, I want to put my money in, let's say I want to put my money in a manufacturing stock, or I want to put my money in the manufacturing sector, like I want to just basically invest in something manufacturing. You look at the fact that in a country like ours, you see that we have a lot of policies that are not facilitating the growth of the sector. So one, manufacturing, two, the financial sector. Like Damilare said, a very highly regulated sector is a sector where the CBN does a lot of work, and just not just the CBN, if you're in insurance, there's ICOM for those pension managers, pension, and every day they come up with new regulations, new this, that. So manufacturing and finance sector are two specific sectors where I say that politics really, really affect the landscape in that space. Victor, I'm done.
Thank you, David. I'm sorry I was muted. Thank you, David, for that. I think you were quite specific. So basically, there are some sectors that are more sensitive than the other. David made mention of how manufacturing and finance sector are quite more sensitive to political shifts. That was really specific. Thank you, David, for that. So David, I'll be throwing this question your way. So can you share some historical examples where like political changes had a significant impact on investment? And what lessons can we learn from this example? So is there like historical examples from like when a government shift or political shift or changes that had a significant impact on investments in the past? And what lessons can we learn from these examples?
So basically, I'll start from early, then I'll start from more recent, then I'll probably go back in time. So start from President Tinubu's election as president. First thing he did, he removed fuel subsidy. Then the next thing he did, he put in place he tried to the CBN. The first, if you notice, one of the first appointments he made was the appointment of a new CBN governor. That's Mr. Yemi Cardoso, Yemi Cardoso. So what Yemi Cardoso first did was floating exchange rate regime. So we have a floating exchange rate regime that caused the naira to basically just move all the way from in the official market. The naira moved from 450, moved to 600 to 700 to 800. Now the official market, we have the naira at 1,005. At some point it was 1,009, almost heading to 2,000. So that is one way of seeing it. We see how the political everybody basically spoke about floating the naira. Everybody who contested in 2023 spoke about their plans to end the duplicated exchange rate regime that we're operating on in the past tenure. So, but when Tinubu came in, he did it. So we see that. We also see his moves. Now we've seen his move towards banks who made a lot of gains from the devaluation of the naira. So banks usually hold assets and some of their liability. They usually hold like a lot of assets in foreign currency, that's in the dollars. So for many of them, they were able to profit off of the devaluation of the naira. Some of their held investment securities. Some of them hold investment securities in the USD. When they made the gains basically just doubled and they recorded a lot of profits. So we've seen his move in that regards towards, and we also see recapitalization. The recapitalization which was announced in March. The recapitalization since the announcement, the one thing the recapitalization did for Nigerian banking stocks. So one thing is I would just, a caveat is that I will make a lot of reference to the stock market because I read about the stock market like every day. So the recapitalization exercise actually caused a massive dent, caused a massive blow. In 1 month of announcing the recapitalization, Nigerian banking stocks lost about a quarter of their value, about 25% of their value, of their market value was wiped off. But now they are steadily growing back. We have seen banks trying to raise capital from the Nigerian exchange through public offerings and rights issues. So that's one in a way that the political mindset of whoever is in charge, and the political mindset of whoever is contesting. I'm not even say whoever is in charge. So that's one thing we always have to look out for. What's their take on certain issues regarding the financial sector, the manufacturing sector. So we also saw, now we go back in time to Buhari and his very, very draconian measures of ensuring that, of his very drastic measures of reducing Nigerian imports. We saw Buhari coming with closing the border, hiking import duties on certain foods that we eat. Some of those measures have been reversed now, and we saw the impact on the general well-being of the Nigerian populace. We saw the impact on food prices. For example, rice. We saw the impact of a 60% import duty on rice. We saw the impact of closed border on rice. So basically, when you say, oh, I want to take my money and I want to invest in this particular this or that, and you see the way the government is moving, and there are there's a lot of stories we can tell about how. So I'll now go back in time to another president who, this one relating to the agri sector, Obasanjo. and so people usually credit the cassava bread thing, cassava bread policy to Jonathan, but when you check back in history, it's actually from President Obasanjo in 2004, and where he announced that Nigerian wheat makers should integrate at least 5% cassava content into their wheat flour, and which is what happens today. That policy basically saw Nigerian cassava output. How do I describe it now? What's the opposite of plummet? Skyrocketed. We saw that policy lead to a skyrocketing in Nigeria's cassava output because a lot of investment went into producing cassava. Nigeria's wheat consumption is very high. So when you announce that, 5% of Nigeria's wheat consumption, at least 5% now, we should be getting into cassava, we saw a lot of investments. A lot of farmers began to actively farm cassava. It projected Nigeria, that thing bulleted Nigeria into becoming the number one cassava producer in the world. But in return, what did we see with that policy? We saw a crashing of cassava prices in Nigeria. So that thing literally led to crashing of cassava prices to the point where we now have fufu being a very staple food to Nigerians because cassava is now like one of the cheapest tubers we have. I think and one thing I'll just say when we talk about lessons that we can learn from how the political landscape has affected investment, one thing we can learn is that we must always pay attention to what the politicians are saying. What the politicians are saying. We must always. Nigerians have a very tepid history of not listening to politicians when they speak. They're always always captivated by the demeanor of their campaigns and sometimes the money they spend and giving people handouts and all those things. But we also must always pay attention to what are they saying about what is their strategy, what are they saying about this sector, what are they saying about that sector, what are they saying about that sector, so that it can help us understand where their mind is when we begin to see them make decisions, and can also help us position ourselves. For example, in the US, in the first tenure of Donald Trump's presidency, it was very big in this first campaign, 2015 to 2016. 2015, basically 2016, it was very big on American first and American manufacturing and bringing jobs back to America, and changing some of the trade deals America has with other countries like NAFTA and with China and all. And one thing that we saw is that the auto industry in America boomed. First of all, investors were picking stocks in that sector. They started to pick a lot of stocks in that sector because there was this idea that if this guy enters, we'll see a lot of manufacturing return back to America. And so it was in his first tenure as US president. And it continued even till today. American manufacturing has been on the rise ever since. Now, the trade war he started with China. Now, another thing we see is that on Sunday, Joe Biden stepped down his presidency ambition, said he wasn't going to run again. What happened to Chinese stocks? It's very funny. Some of the relationship politics and investment have. Chinese stocks crashed in a way because not crashed. They literally just, there was a lot of decline on Monday. We saw the Shanghai exchange declining by over 1%. Because why? Because people who are invested in that stock market became apprehensive of the increased chances of Donald Trump winning the presidency. So in China, there's this apprehension that if Donald Trump wins, a lot of their deals with America, there's going to be a lot of there's going to be increased trade tensions between America and China. So it's leading a lot of people out of that market. This just the fact that the mere idea that this person may win the presidency is already giving investors they're already making and betting and taking they're already taking their positions in the stock markets to know what's to long and what's to short and stuff like that. So I've said a lot. I've said too much probably. Thank you very much.
I'm telling you, like I was with my on my notepad on my laptop, even jotting down some things I would write later on. And that was really, really insightful and like in detail. I like the fact that you went through different regimes, through different political shifts from Nigeria, from like our present regime from President Tinubu to President Buhari to Obasanjo to Jonathan, then to over to like United States to Trump. Like it was really in detail. I'm sure like a lot of people on the call gained a lot from this from the explanation you gave. Also before I move on to Dami, so some people are raising up their hands. So we're not taking questions now with via call, but we would soon. So those raising up their hand, just please bear with us. For now, we are taking what this conversation just meant between me and the speaker. So thank you guys. But you can start dropping your questions on the chat box. So when we're done, we can start reading through them, and professional speakers here can answer to them. So thank you guys, and I can see more people joining in. Please keep on joining. If you just join us now, we're talking about the topic understanding how political shifts impact your investment. So in case you just joined us, we are presently talking about this topic. And if you have somebody, an investor, or like someone that would be interested in this webinar, you can share the link with them so they can join us in this insightful conversation. So Dami, I was going to ask you if you had anything to buttress on the point. So the question I had asked David was if you could share some historical examples on where political changes had a significant impact on investment, and what lessons can we learn from these examples? Do you
Yeah,
have
I
anything to
mean,
buttress on that?
David
Yeah.
has really, really. I think he said most of the things I would have said as well. But, I could just still pinpoint on maybe a couple of things. So an example is Brexit, which is UK's exit from the European Union. So that was like in 2016 when they had the reform, and then they voted to out of the European Union. It had a significant impact on the UK economy rather, in which foreign investments basically reduced, and in a way it affected their GDP. And they think their GDP has gone down by 2 to 3%, maybe compared to their baseline GDP. So that also affected their what I call it, per capita income. Maybe it has reduced by £850 or so. So all these things, they tend to have effect on the economy in that way. Another example is the US-China trade war, which has been going on for about a while now. We have the likes of Trump, we have the likes of Biden, which Joe Biden, which they've been imposing import tariffs, and import bans on certain commodities or products into their economy. So all these things they've been really, really reducing to global GDP contraction, and in the US as well, actually. So all these are like examples of political shifts that has affected economy on a global scale and then international trade. I think the last one I'll probably pinpoint on is the Trump's administration policy. David already mentioned a couple of things. I think one thing Trump also did that affected the US stock market during his administration was the tax cut he did. Although it affected the economy adversely, but specifically the stock market rallied during that point in time because companies tend to pay lower taxes, and then it's increased their income. So the stock market rallied at that very point in time. Those are just the few things I would have.
Thank you, Dami. Thank you, Dami. I like the fact that we try to touch like a little bit on each market, from stock market to each political shift. Thank you. That was in detailed. So this conversation is going really well and very insightful, but I think we're running out of time. So I would, Dami, this question is for you. So we'll be talking about how political changes or shifts can like impact your investment, and be it positively, be it negatively, with the examples our guests have shared with us today. So the question now is, how can investors diversify their portfolios, their assets, to make sure they reduce this risk associated with political shifts? So I'm an investor. How do I diversify my portfolios to make sure this risk, this political shift that keeps on happening, that keeps on happening? How do I make sure like I can reduce this risk?
All right.
Dami.
So yeah. So given the time constraint, I'll just be a little bit more specific and maybe shorten what I'm supposed to say. I would say, first of all, you have to diversify across asset classes. When I say asset classes, I'm referring to the likes of stocks, bonds, real estate investment trust rates, or real estate properties, actually, commodities. You also want to diversify and put your money in government bonds. You also want to buy the likes of gold, precious metals, just to make sure, like, if you're taking a hit in particular asset classes, you have other asset classes to absorb these losses and then still put you on a very good note investment wise. You also want to diversify across geographies. You don't want to put all your eggs in one basket, as I would say. So you don't want to put all your money in Nigeria. I mean, if all your money has been in Nigeria all along, you'll have probably taken significant losses considering the valuation and then inflation interest rate. So you want to put your money across different economies or countries. You want to put your money maybe in developed economies, emerging markets, just to, in emerging markets, the risks tend to be higher, but, Nigeria is an emerging market, so the higher the risk, the higher the return. It's possible to have more return in Nigeria. The more return your integration is taken it away, but I'm just saying, in the likes of Brazil, Argentina, if you invest there, the risk is high, but the returns are also high. So you want to diversify across geographies, put your money in different places. And then the last thing I would say is you want to diversify across sectors as well. So you don't just put your money in high T. If you've had all your money in, say, in the US market, in the US stock market, high T, semiconductor, in the past 2 weeks, you've probably taken a significant hit to your portfolio. So you want to diversify across the likes of defensive, growth stocks, value stocks, the likes of Coca-Cola, I don't want to be specific, but I hear Coca-Cola, people, stocks that tend to do well in cases where you have political uncertainties. So yeah, pretty much that.
Thank you, Dami. That was a nice answer to the question. I'm sure investors are like, why not be specific? We're here to make sure what should we do with our investments. But thank you, Dami, for that. So David, I'm going to ask you this. So sequel to the last question. So they are like, for investors or like for just someone trying to invest, so what indicators should investors be looking at to predict potential political changes? So like maybe there's like a political change meant to happen or that might happen like in later times. What indicators should I be looking at? Like, okay, this might actually impact this investment I have. What are the indicators I should be looking at?
Okay. In very general sense, like I said before, sometimes now I'm looking at it from the broad perspective of the entire country. I'll say you look out for the body language of whoever's in charge. So one way you can know their body language is by understanding their policy statements when they want to contest. I'm being very, I don't know, I'm just trying to be very plain with the answer, looking at their policy statements when they want to contest. However, in the whole general sense of it, in Nigeria, in our beloved country, Nigeria, this is a very, very dicey question because you almost do not know. Politicians move with the wind. Nobody knew, nobody anticipated the fact that, except you work in the maybe you work very closely with the Minister of Finance. That's when you have the idea that they were going to do a windfall tax, 70% of tax. And the funny thing with this windfall tax is that they are going to be taxing already reported profit from last year. Banks have already reported profits. They've done what they want to do with the profit. They've paid out dividends. They've moved it into. This is already July of next year. This is already July. We're about 5 months to the end of 2024. Then they have to now go back and then now have to dip their hands into retained earnings. And so sometimes you almost do not know in a country like our own because policies are made on a whim. policies can be made. The president can just sleep and wake up and decide to make a new policy. In our own case, it's almost, but in a very general sense, in a very general case, you have to always observe discussions that are going on. That's where you now begin to pay attention to the news, business news. I don't know how many Gen Zs are on this webinar. Sometimes just take a little bit of a break from Instablog Nigeria, and then sometimes you can also make your Twitter feed smell more business oriented. You can just follow a few people and pay attention to finance news, pay attention to investment advice and the likes, so that you can have a feel of where the market is headed, where the country is heading to. Like now, we've heard of the 150-day duty-free window. I don't know how many people heard of it though. We heard of the 150-day duty-free window. But 2 weeks prior to the announcement of that, you already smelt it that the government was there was a move to reduce or remove import duty on food, because they leaked out a document. The document was leaked out. All the media houses carried news about this leaked out document. But if you are not interested in those kind of things, you will not know. So if you want to actively be an investor, you want to actively invest, you want to know how the political landscape affects your investments, then you have to be in touch with the news and information. You have to follow so that you know where the sentiment of the people in charge, what their sentiment is about. For example, we see what's going on with Dangote refinery and all the back and forth. Then you understand that there is a struggle against Nigeria's ability to refine its own oil. You understand this? Then if you are not an activist, you are just a regular investor, you know that okay, it's time to just stay back on anything relating to oil and gas for now. It's not my field. Just you see the whole struggle and the back and forth, you know that okay, this is not it. But if the government comes out and say, okay, we want to try and help life better, maybe the president comes and say, we want to try and make life better for our manufacturers, and then we are thinking, or we are playing around with the idea of tax cuts. Then you begin to know that, okay, this is something they can do. Let me try and put my money in some manufacturing stocks and see how they will do at the end of the year. Stuff like that. You must always pay attention to the news. How you position yourself, that you pay attention to information sources relating to news and investment.
Thank you, David. Are you done? I don't know if it's your network. Hello, David. So, David, are you done?
Yeah, I'm done. I'm sorry, I'm having some network issues. I'm done. Thank you.
Okay. Thank you for that. That was an insightful answer to the question. So you have to always be updated, just as David has said. You have to follow news. You have to make sure what you're following on your timeline is something associated to be. I think Dami, I think your mic is making a bit of noise. So you have to make sure you're updated, you're following news, your timeline is like filled with business news, business jargons, everything. You have to digest everything, because especially in a market like ours, in Nigerian market, you have to always be on your foot, basically, because just as David said, policies, you can't really predict it, except maybe you're inside. But to just mitigate risk and everything, it's just good if you're always updated. So thank you for that, David. So I think, Dami, I'm going to be asking you this. So are there, based off what David said, of indicators we can use to like predict potential political changes? So like, are there any specific asset classes or investment products that tend to perform better during times of like political crisis or like uncertainty? So are there like
Yes. So
asset classes I should be looking at?
yeah, so you basically want to invest in government treasuries and government bonds. Just confirm if you can hear me because I think my stuff was lagging too.
Yeah, I can hear you loud and clear.
Okay. Yeah, so you want to invest in government bonds, you want to invest in defensive stocks. When I say defensive stocks, stocks that are not cyclical, that they tend to perform all year long, stock that are actually essential to the people. Say the likes of healthcare stocks. You want to also invest in infrastructure. You want to invest in infrastructure as well, so that the likes of REITs, real estate properties. You also want to invest in dividend-paying stocks, stocks that belong to the dividend aristocrats in the US, and then those that pay dividends in Nigeria too. You also want to invest in safe haven currencies, the likes of the US dollar. If you had invested in the US dollar, say since last year, you'd have probably made some significant gains on the currency alone. And then if you had invested in a revenue generating or a profit generating asset, you'd have made double gains in terms of currency appreciation and then returns on investment. So these are the things you want to typically invest in. Yeah,
Thank you for that. Thank you. That was insightful and like very brief. So I'm going to drop this on the chat box now for if you would like to have like a Rise representative and contact you based off like investment. If you potentially want to invest in asset classes, we have like fixed income, stocks, and real estate. So according to your risk appetite, you can look through, or you can just fill the form. So you can have a right representative reach out to you and talk to you on what your risk appetite is and like how well what you're trying to achieve with your investment basically. So I'm just going to drop this here in case you want to feel that. So I'm going to moving on to the next question quickly. I think we are close to the end, to the hour mark. So David, how do political changes in major economies like the US or China, how do they affect global investment market? So major economies like the US or China. So if there's political changes in those major economies, how do they affect global investment market? How do they affect investment markets in general?
So
Globally, sorry.
they have these two markets you just talked about. They have huge impact on global investment market because of their size. Their size gives them an ability to impact another market. So, for example, if you check the trend, you discover that when the Chinese market is doing flatly or is performing badly, it's just like Bitcoin and other cryptocurrencies. Then the Chinese market is performing poorly. Discover that its impact ranges through all of Asia. You see that Hong Kong too is a big market in itself. But let's say Hong Kong is doing badly, or let's say Hong Kong and Shanghai are doing badly. You discover that there's an impact all over. It just becomes because of the amount of companies, because of the amount of interest that the companies listed on these exchanges have across Asia. So in the US, it's the same thing. Anything that impacts the US market has an impact on the European market because of the amount of interest that American companies have in Europe. It may not even touch much on Africa. What touches much on Africa? What is some of the factors that really touch much on Africa are things relating to uh, oil and gas, because that's like for the African continent, that's the number one on our import list. Oil and gas, we basically import our energy, so we say those are the things that really hit us hard. So political changes sometimes come with one thing known as global supply chain disruptions. So it's all dependent on many times global supply chain disruptions can occur and they will have this level of impact on how things get to different places. So let me use an example of Russia-Ukraine crisis. Russia-Ukraine crisis created a supply chain disruption in the fertilizer industry. In the fertilizer industry in such a way that Ukraine and Russia, they are some of the world's largest producers of phosphates, which is used in production of fertilizers across the world. So when this thing happened, fertilizer production basically stopped. In fact, in some parts of Nigeria, fertilizer production just stopped. Fertilizer prices skyrocketed, led to definitely no fertilizer, no farming. If you are not a farmer, that's when you will not understand the impact of fertilizer on food. Led to no fertilizer, no farming. So what does that basically depict? That one essentially tells you that no farming, no harvest. No harvest, no food. Basically has like a ripple effect. So sometimes political changes, let's say using I would like to use America, but America has been quite a stable economy since 2008. Okay, 2008 global the global economic crisis of 2008, what triggered it? It was triggered by a real estate bust in the American economy. The real estate stocks just began to tank. And these stocks there had been a period of a bubble. They had been in a bubble prior to that. House prices were just going up, so real estate stocks were just going up, and all of a sudden there was a lot of it led from one thing to the other to the other. I think a government change, a government policy led to that real estate bust. And the NASDAQ, the NYSE, that's the New York Stock Exchange, crashed. Next thing, there was a global ripple effect on the London Stock Exchange. Even in Nigeria, that we felt like, oh, we're safe, we're good, we're fine. In 2009, all of these things. In 2009, what it did is that it triggered a collapse, a banking system collapse in Nigeria. What happened in 2008 in the US triggered a banking system collapse in Nigeria in 2009. So these economies are very big, and the world is almost like a global village right now. Anything that affects Microsoft, let's say something happens to Microsoft, like what happened on Friday, where there was a Microsoft shutdown. Let's say Microsoft shut down across the world. The Zoho we are using to carry out this webinar, first of all, is affected because I'm very sure Zoho utilizes some Microsoft resources or whatever. And the world has become so interconnected that these countries hold so much sway over. Let me use China as an example. China is having a lot of impact on the Nigerian economy with this construction company now, CCECC. CCECC is listed on the Chinese stock exchange. Anything that happens to CCECC that causes them to lose, that causes the company to say, let's say they have to crash, it basically leads to a stalling of major road projects that we have in Nigeria. All of it just stalls at the point. So that's one thing. That's one. This economies, China and the US, have very, very huge impact on global economy and global investment landscape. Thank you. Not too much. I'm done. Sorry.
Thank you, David. That was so in summary, like US and China economy can like generally affect the global market. Okay. Thank you for that, David, because as you said, they're a big market and like they are very influential. So we're just going to take just this final last question so we can start taking contributions and questions. I can see some on the chat box, so you can keep on dropping them. We'll get to them shortly. We're very close to our mark, but just this last question so we can start preparing to round up. So for investors, so damn this for you. So for investors in emerging markets, how should they approach their investments when significant political changes happen in the country where they're investing? So if I'm an investor and let's say something political, like a change or a shift happen in the country where I'm investing, how should I approach my investment?
Okay, so to be very quick and fast on this, I would say you want to first of all, shift your investments to a more liquid asset class. You want to move your money, say from, let's assume you have your money in illiquid asset classes. Maybe you have your money in private businesses that it may be really difficult to liquidate your money. You want to move your money from those kind of assets to a much more liquid asset. You also want to move your money to a less volatile asset class, say the likes of precious metals. You want to buy gold, you want to just keep those things in your house. So, you don't want to be too exposed to whatever the changes might bring. And you also want to reassess your tolerance risk, like, okay, based on what is going on, can I afford to lose 30% of my money? If I can't, get out of the stock market, get out of the investment market. You want to keep your money maybe in government bonds. You also want to keep your money maybe in cash or in foreign currency. And you also want to diversify. If you are the type that you've been investing in Nigeria for a while now, it may be a time to reconsider things and then put your money out or put a portion of your money out of the country just to have some form of security. We also want to focus, as I said before, focus on defensive and resilient sectors. So yeah, pretty much that. Just about time.
Thank you very much. That was very brave, and I could get the whole solution or answer to the question from that. So I think we've come to the end of our discussion between me and the guests. I want to appreciate them. So we'll just quickly run through some questions. I'm so sorry, guys. This was meant to be a 1-hour webinar. So, well, basically, we're just going to start taking questions and contributions. So I can see some questions. I'll start taking them. So we won't waste any much time. So first question, I'm trying to run through the Q&A section now. So Dami, I'll ask you this. So someone is asking, Chris is asking, so what's the option for Rise investors? What do we focus on investing now? And how do we navigate the prevailing economic realities in present-day Nigeria?
Sorry, please, can you take that again?
So Chris is asking, what's the option for Rise investors? And how do we focus on investing at the moment? How do we navigate the prevailing economic realities in present-day Nigeria?
Oh, yeah, sure. If you're investing in Rise, you can be rest assured that we are on our toes. We important tools to ensure our investors are protected from volatility, from the investment risk, say in the country. And majority of our investments are not even in Nigeria, so we invest mostly outside of Nigeria, say in the US. But yeah, we are on our toes to make sure our investment strategies are on point. If you are scared of maybe you are investing in Nigeria and then you're at risk, no, you don't have to be worried. But as far as you're invest, you're covered.
Thank you for that, Dami. So as far as you're a Rise investor, you're covered, and that's why we have experts like Dami who make sure research on opportunities and research on finance updates. Thank you, Dami, for that. So David, I'm going to be asking you this. So Praise Williams is asking, for someone new and interested in trades in the stock market, what keen advice would you give in terms of do your own research? Are there valuable resources you could point to? Also, we are in the era of banks' public offerings. What platforms would you recommend to get these stocks apart from going to the bank? I mean, for dividend-paying stocks. This question is too much. So, David, I'm just going to ask you the first one so you could answer the second one after you're done. So, basically just 1 minute for each question. So, the first question is, what keen advice would you give in terms of doing your own research? Are there valuable resources you could point to? So just answer that in some seconds and then ask you the second one from Williams.
Just attention to dividend paying stocks. Dividend paying stocks are basically they basically indicate profitable companies. So pay attention to dividend paying stocks. Pay attention to their history of dividend paying over the last 5 years. All of this information is available on the internet. If I don't want to advertise my platform, but they are available on Nairametrics. Sorry, but pay attention to stocks that pay dividends, so okay, these are the consistently profitable companies that are listed on this exchange. Thank you.
Thank you, David. Actually, yeah, not to blow your own actually, but yeah, you also have to pay attention to like some interesting financial website or news outlets like Nairametrics. I also use Nairametrics from time to time for some financial updates and news. Also, so Praise Williams was asking on the second part. So we're in the era of banks public offerings. What platforms would you recommend to get these stocks? Apart from going to the bank, I mean, for dividend paying stocks,
So
what platforms or apps can you use to trade in the Nigeria
you
exchange?
banks to participate in public offerings and right issues right now. I don't know if Rise has a platform that allows that, but participating in public offerings made very easy. NGX Invest is the is is, is probably the most seamless platform I've seen that allows you to invest in um the public offerings and right issues. If you can just Google NGX Invest and follow through in two, if you have money in your account in 2-3 minutes, you already participated. That's how simple it is. So NGX Invest, and I think some of the stockbrokers on their website they make the process too very seamless. Yeah, some of the stockbrokers like I don't know, Mary Stem, um, Afroinvest, Chapel Hill, all of them, they have easy, you don't need to go to their buildings, you don't need to go to the bank, just on your phone, 5 minutes, you already bought what you want to buy. So NGX Invest is the one that I know that is the most seamless right now, very straight to the point. Yeah, thank you.
Thank you, David, for that. That was quite insightful. So, Dan, would you like to add on that, or David already um touched on what you like to say? Hello, Dami, are you with me? So we don't waste anyone's time because we're past the 1 hour mark. I don't know if I should take one last question, or does anyone want to? Okay, someone has been raising up there, and okay, I guess this is a mistake. This is from 55 minutes ago. So let's just take one last question and then round up. I'm trying to look for something we haven't touched on today's topic. Today's topic was really insightful, especially since as an investor you have to always be on the edge, because these are things apart from economic realities, also political changes like this impact your investment, and you also have to always be on the edge. So guys, I also drop a link on the chat where if you would like to speak to your rights representative, maybe you are kind of skeptical on some investment you would like to make, or like to ask more questions before you start investing, or you're new to investing, or you're investing and you like to diversify. Rise offers this option on fixed real estate, fixed income, and stocks, and the stock market. You can also invest through the Naira wallet, which offers you up to like 20% returns. And one thing about investing in Rise is everything is well documented and like researched on. So they're not like fantasies returns, like get this and get 100% return or something thereabout. There are like researches before this are done, and like yeah, this investment are like explain to you very extensively that this is how we do this, and this is how we do this, and this is how you get your returns. So thank you very much. So David, would you like to answer one last question, because I think this is interesting before we round this up?
Okay, let's go.
Okay, so this final question, okay, Cole was asking, Indian stocks got a lot of attention in Q1. How do you view Indian and Brazil amidst the US-China tension?
So Indian stocks have been on the rise since last year. India is now the Bombay Stock Exchange is now, I think, higher in market valuation than the Hong Kong Stock Exchange. So Indian stocks have basically been that country is the fastest growing economy in the G20. So now number five economy in the world, just behind, very slightly trailing
Wow.
Germany, and so projected to even become number three very soon. So that's like by 2030, I think. So that country has a lot of potential. And their stock markets too is also a display of the amount of optimism around the Indian economy. About their stocks relating to Brazil, one thing we can take from the entire scenario is that US China tensions bringing in India and Brazil, it's not something you can bank on because India has a very good relationship with US. So something there is that US and India are trying to establish a kind of trade partnership, as the US is basically trying to look away from China in a way. So quite a number of manufacturing and has been shifted to India. Like I don't know if people know some of their iPhones, some of the latest iPhones are now made in India rather than China as it was in the past. Um, Brazil is also a fast growing. It's also like the fastest growing. No, not the fastest growing. It's also like a fast growing economy, the biggest economy in South America. They will always have a good relationship with the US. It's dicey in a way. So, but one thing is that US is big. They are big. They're not going anywhere in the meantime. Same as China. They are not going anywhere in the meantime. So you can really just play around those markets, but it's not like it's not like there's going to be one significant shift in the next 5 years. I'm not projecting that there's going to be one significant shift in the next 5 years. Status quo is just going to remain a lot of back and forth, political rigmarole and gimmicks talk. It's all just talk basically until something big happens and one economy collapses, then we can say, oh, something big happened. But I'm not projecting that. You can always invest in Indian stocks because India is a growing economy, and Indian stocks are also very. I'll use Infosys as an example. Infosys developed a banking software that all the banks in Nigeria are now adopting. They were using one that was probably developed by IBM, I think, but now they've shifted to Infosys. Infosys stock is booming. Same thing with, they say, a company like Airtel. Airtel is listed on the London Stock Exchange, but Airtel is a subsidiary of a company listed on the Bombay Stock Exchange. That company too is growing. So basically, Indian companies are growing, so their stock market too is growing. And I'm not sure there's a lot of point of entry for Nigerians in that stock market. I don't know. Maybe if you're in the US or you're in London somewhere, there's a point of entry. But from Nigeria, I'm not sure there's any platform that offers us access yet to that market. But one thing is that there's high optimism on the Indian market, but not in relation to anything relating to US and China. It's just all that's going on with US and China is just regular gimmicks, political gimmicks.
Thank you
So
very
thank you.
much, David. I very much enjoyed your answer to the question. So I was going to ask, you were saying Indian is one of the fastest growing economy like in the world, just currently below Germany. So
Yeah.
what I would like to ask, what are the drivers? What's driving this growth? You said since like last year to like presently. So what are the drivers driving this growth?
India has been one of the fastest growing economies over the past 10 years. All of these things is just good political decision. That's what I would describe it as. In as much as I know that sometimes we have if you come from a country like Nigeria, you'll be very pessimistic about politicians. But India has a leadership that has really been intentional about driving industrialization. So one of the things they did is their president came with a lot of tax cuts for businessmen. Tax cuts for businessmen that caused a lot of businessmen to to start opening up factories in certain places. They now have like a number of free trade zones. They have industrial clusters, and they now put another thing is they put import duties using taking advantage of their population. They know that they're a big market, so every company wants to enter into the Indian market. So one way they now did it is that they introduced quite high import duties on goods that can be made in India, causing many people to now say, okay, let's revert to making stuff in India. Microsoft manufactures in India, Apple manufactures in India. Some of our smartphones now have now been made in India. And they have they were very big on the agricultural drive. So the things that basically drove it is good, I would say, at least good decision making from their politicians, not in our own case too. That's one thing I tell people about Nigeria. Nigeria is not a, I don't know whether I'll say it's not a spiritual case. It's not a spiritual case. It's just sometimes good decision making. We've seen it happen in our country before, but you just come to a point where it almost seems like that was many decades ago. Nigeria at a point grew. Nigeria in 1 year had a GDP growth rate of 15%. That was in the year 2000. How did that happen? We need to ask ourselves, how did we do a GDP growth rate of averagely 5% for almost 20 years? That's from 1999 till 2015. We had an average growth rate of 5% for that long period. How did we do it? Then if there's something we did then that we should do it again. That's the way I see it. Thank you. That's my
Thank you very much, David. I like this is very, very, very much in detail. There are even some things I wasn't aware that I'm aware now because of your answer and the solution you gave to the question. Thank you very much to be over very close to 100 people on this webinar. And thank you very much to people that wait that were with us till the end. Would like to round this up now. Really, I would like to apologize to everyone for taking this much time. Normally, this space is meant to be a 1 hour mark webinar where we just have an investment club meeting and talk about very important and vital topics related that like impact our investment. So that's why we have David here with us and Damilare here with us. And I think they quite did a lot of justice to this topic. Like there are a lot of things I did not know or I wasn't really concentrating on, but from their responses to this topic, I kind of like have like a very good grasp on them. I would like to really appreciate them for taking the time to come talk to us about this topic. And there are a lot of questions that kept on coming in. There are a lot of questions we haven't touched. You can just click on the link below this Q&A section to join our community and ask them. I'm sure there'll be like some like-minded individuals that would answer to that later on. That's one thing about joining a community. You would always have people that might think alike or very closely think alike with what you're trying to say, or might have answers to your questions or inquiries. So thank you very much for joining in today. So in case you join in towards the end, the topic of the conversation we're trying to have this evening was understanding how political shifts impact your investments. We touched on a lot of very vital subtopics on this topic. We talked on how investors can mitigate risk, on political shift, on like historical examples that have like impacted political shifts. We talk about how like US and China economy can impact like global investment scale in general. We really touched a lot on this topic. And this was also recorded, so you also want to watch out for the recording of this webinar, and we'll share it towards before the end of next week. We'll make sure we share it. So if you would like to replay this, to listen, or like to share it to some people or friends, family, wherever, whoever you want to share it with, that's much likely appreciated. So this was a really good one. I'm sure if you like enjoy this conversation discussion, you can drop like say an emoji or like a reaction or like a comment on the Q&A, and we just end this right now. But like I would like to really I'm sincerely appreciating people for waiting towards 20 minutes past our time. In case you join us towards the end, this webinar was brought to you by Risevest. And in case you don't know who Risevest is a digital wealth manager that connects Nigerians to foreign investment opportunities by offering fixed income securities, US real estate, and US stocks. So, and these are well handled or managed by experts in the field. So, one thing that differentiates us with the rest in the Nigerian market is we act as a fund manager. So we don't like let you figure out which stocks you want to buy or like go do like a lot of research on which stocks you should do or where which one you can pick currently, which one should you pick later. We do all this on your behalf because we have experts that are tending to this from time to time. And if you would like to also invest by yourself, you can also use one of our platform that is also under Rise. You can use Chaka to do just that. This was a very interesting topic. This was an insightful one too. Dami, do you have any last word or closing remarks you would like to make before we end this?
Not really. Sorry, I took off for a while because of my network. But anyway, what I would really like to say is for you to go into investments in the first place, you need to like there are certain things. You can't just wake up one day and say, like, I'm just investing. There are things you need to always put in line and then put yourself in check. Like, what are your risk tolerance? See at the time that your risk tolerance is very, very low. Most of the kind of things you want to invest in, you want to invest in asset classes that is not going to give you hypertension and growth. You don't want to pay on one in stocks and start of an investment journey if you have a low tolerance for risk or for losses. So those are like just the things I'd like us to go out with from this particular meeting.
Thank you, Danny. Thank you, Danny. Thank you, Danny. David, do you have any like closing remarks or what do you like to share with us before we end this?
Honestly, thank you all for listening to me. Thank you all. I'm grateful to have the chance to talk to people like this. So, thank you.
Thank you very much, guys, for waiting to the end. We have come to the end of our July Investment Club meeting entitled Understanding How Political Shifts Impact Your Investment. So I do hope everyone have a restful weekend and please take that much needed rest. Body no be firewood. So thank you guys. And also as the salary notification keeps coming in towards the end of this week, try as much as you can to make sure you budget and also spend wisely. Thank you all for tuning in. Have a restful weekend. So I'm just going to be dropping links of if you would like to join our community to like interact with or network with like literally like-minded people, like you would like to ask some questions or inquiries, you can join in. Or if you would like to also invest or speak to your rights representative via call, you can fill in a form I will also drop. So that's that about that. You can start opening off now, but I'll leave the space open for people that would like to click on these links I'll be sharing now below. But you can start opening off now. Thank you guys for tuning in again. And thank you, David. Thank you, Damilare. Really much appreciate you for taking the time. Have a restful weekend.
Thank you.
Thanks,
Thank you.